One of the best parts about being a member of an electric cooperative is any money that is left over at the end of the year from all the bills we collect that's over and above what our cost is to do service and pay our wholesale electric bills and pay our employees comes back to our members in the form of capital credits. So those are allocated to the members at the end of each year, and then historically Heartland since 1997 has been retiring those capital credits back to our members as checks. So the retirement of capital credits each year is determined by a couple of factors. The biggest one is within our bylaws. It says, is any of the capital credit retirements going to harm the cooperative from a financial perspective? And so if the board decides that that is something that is feasible to do, then they will generally retire capital credits in the November-December timeframe. But it's all based on an allocation of how much energy you use in one year and what's that look like as a percent total, and then you get a capital credit check that's your percentage of how much revenue you brought into the cooperative. Different cooperatives have different modes of operating. So some of them that might give more money back each year, it's because they are able to collect more money through different fees or services that they have available through the government. Other ones, it might be like a grain co-op, that it's more of a year-to-year basis on what's going on. But for Heartland, our assets that are out there are 35-plus year assets. And so when members pay for electric service today, it's going to fund the co-op for the next 35 years for all the money that's going through with our property that's out there. So we look at it as if we retire too much money, then it's going to only raise electric rates. Whereas if we don't retire enough money, then it's going to increase how much money we have here. So it's a balance, and there's some good solid practices within the rural electric cooperative space that helps give guidance on how to balance member rates, equity, and also all the assets of the cooperative. Future retirements of capital credits that usually happen in that November-December time frame are going to be going back as bill credits for all of our active members. And then it'll be going back as checks for anybody who is no longer an active member but still has outstanding capital credit balances. We'll send a check back to them. Heartland decided this was a better way to go because of a couple of reasons. One is the postal service is really slow. And around the Christmas time period, it just seems to slow down even more when we're sending those checks back. And so it's just a quicker way to get the money back so that we have less checks lost in the mail and less people calling in to answer questions. That it costs about $1.50 for every check we mail out. So if we are issuing those as bill credits instead, it's $1.50 less per check that we then have to collect on our electric rates to pay for sending those out. So again, it's just helping us control our operation cost, and every little bit helps.